Alright, moving on to Affymetrix, AFFX. We have a little ascending trend or ascending triangle here with a gap fill. So I am looking at a short squeeze again. This is actually this is a higher short squeeze than ATPG, I think, but I may be wrong. I could have gotten these switched up. One is 18%, the other is 12.5. No matter, both short squeeze statistics are high, and if we do get a breakout above 8, that would and possibly could bring enough volume accumulation if we do start to see more normal volume accumulation for AFFX, and if we break out above about $1.9 million or million shares traded on the daily chart, I do think that this has a very high potential if we zoom in here of breaking out above 9 and at least hitting 850 and 855 and filling this gap. But if we don't see that, I can see a breakdown, because all we would have to do would break down below this ascending trend line as well as the 50-day simple moving average. So it's very easy to roll over. It's also very somewhat easy to break out. This is a 50-50. It is a spec play, so keep it on just in case one or the other happens. You can play it both ways here, which makes the stock a little bit more versatile than the stocks that we're covering tonight. Fairchild Semicon, very neutral right now. I have it on the list just to watch it. It's a patience play. I love my patience plays. All of you that follow me should know that I love my patience plays. We're dealing with support at 990 and price resistance at 1077. We're very mixed when it comes to the 5-day, 10-day relationship. The 20-day is supporting the price right now. The 50-day is right at that 970, or I guess that would be 990, excuse me, that 990 price support. So again, not much volume. We're not seeing much volume at all. So until we see volume, I'm not going to really consider this position-wise, but it is nice to have on the watch list. Renazola came out with earnings today. I didn't get a chance to look at them yet, but from quarter to quarter, this is negative. The estimate was under 7 cents. The actual came in at under 23 cents. So just by the looks of it, didn't look good. We have an inverse hammer candle here, and it's sitting right on the 50-day and the 200-day simple moving average. If we get a breakdown below that, we are fair game for that 491 price support. We also have the descending trend line kind of pushing down on it, and it looks like we could roll over when it comes to this 5-day, 10-day simple moving average relationship. So we need to watch this one for potential short play, and a very short play. Otherwise, if we're not even looking at a short play, we could kind of look at it from a supply-demand perspective and see how many buyers we get around the 490 level when and if it gets there. EGLE, I was just talking to Today Trader, my buddy on Twitter. He is an awesome trader. If you don't follow him, Today Trader. He's the man. He tweeted that he likes EGLE too, which is an awesome second opinion. 605 breakout. We're going to 680-ish. I would say 670 would be the prime target there. But a break over 605. This volume, let's zoom out here. Check this volume out. Last time we had this volume, we did have a monstrous run. So I can see this because we're kind of chilling in this neutral area that we used to before. We are above the 200-day, the 100-day, and the 50-day simple moving average, which all bodes well. We could definitely, most definitely break above the 605 on more volume tomorrow, and we could see, 605. We could see 670, 680-ish in the future. I like this if we get that break. Crocs is kind of just hanging out in the breeze. It's very indecisive, but we need to understand that a break over 8, if we go to a longer perspective chart, a break over 8 gets us into that high $8-9 level. So this is also something to keep on the watch list, but it is a patience play.